Good morning and welcome to T-Hub Capital, the Investors Lounge, the podcast where we explore financial market dynamics, emerging trends, and the insights that shape successful investments. Each week, we'll delve into the strategies and analyses that drive our investment decisions. You'll get an insider's perspective on the factors influencing markets and the potential winners and losers of tomorrow. Subscribe to the podcast to stay ahead of the curve and make informed investment choices. Enjoy listening.
Welcome to T-Hub Capital's The Investors Lounge weekly newsletter. Today's date is the 4th of April. Let's dive into the week's stock market news. US tariff shock hits European markets. ECB considers pause on rate cuts. European stock markets took a hard hit reacting to the announcement of higher than expected US trade tariffs, registering the sharpest drop in 5 years. The Pan-European Stocks Europe 600 index, measured in local currencies, closed 8.44% lower. Major national indexes also recorded heavy losses. Italy's FTSE MIB fell 10.56%. Germany's DAX and France's CAC 40 both tumbled 8.10%, while the UK's FTSE 100 index plummeted 6.97%. This pronounced uncertainty, driven primarily by US trade policies, is reportedly prompting European Central Bank ECB policymakers to consider a pause in interest rate cuts. According to internal ECB sources cited by Bloomberg, the article suggests that should more hawkish members maintain a determined stance to leave rates unchanged, more dovish members are unlikely to push back hard. ECB President Christine Lagarde, in an interview with Irish radio station News Talk, emphasized the need for caution regarding the inflation outlook precisely due to the uncertainty generated by US trade policy, stating there was still a bit of work to do to reach the 2% target sustainably. Lagarde added, however, that it was clear such policy would have a negative impact on the global and US economies. Bank of Italy Governor Fabio Panetta also reiterated the need for caution in lowering borrowing costs, as reported by Reuters. Holding a slightly different view was Bank of Greece Governor Yanis Stounaras, a known dove, who stated in a Bloomberg interview that tariff policies would have a limited impact on growth and posed no obstacle to a rate reduction in April, despite the cautionary signals from the ECB. Financial markets, apparently influenced by recent political statements such as a speech by Trump, raised their bets on an April rate cut, taking the perceived probability to 90% and fully pricing in a move by June. Adding to the complex picture for the ECB is mixed economic data from the Eurozone. Annual consumer price growth ticked down slightly in March, standing at 2.2% from 2.3% in February, with underlying price pressures softer than forecast, fueling expectations for an April rate cut. However, Eurostat data showed that the labor market remained robust in February, although the jobless rate eased to a record low of 6.1%, a factor that could justify the central bank's prudence. Separately, in the United Kingdom, the housing market showed signs of cooling. House price growth was flat in March, snapping 7 consecutive months of gains, ahead of transaction tax changes scheduled for the end of the month. Bank of England data also indicated that activity had moderated, with 65,481 mortgages approved in February, down from 66,041 in January and the lowest number since August last year. Now our insight into alternative markets. Europe's private equity boom rate timely opportunity. Europe is emerging as a prime destination for private equity pay investment, driven by a unique blend of factors that signal both opportunity and urgency. The continent boasts a vast and diverse market, home to over 750 million people across 44 countries, offering a rich tapestry of industries and economies ripe for investment. This scale is paired with a growing number of innovative, high-growth companies, many of which remain undervalued compared to their US counterparts, making Europe an appealing landscape for pay firms seeking untapped potential. A significant draw is the region's fragmented yet dynamic business ecosystem. With thousands of small and medium-sized enterprises (SMEs) forming the backbone of its economy, Europe presents a wealth of acquisition targets. Many of these firms, often family-owned or niche players, lack the scale or expertise to compete globally, creating a perfect storm for pay investors who can step in to consolidate, optimize, and scale these businesses. This fragmentation, combined with a surge in entrepreneurial activity, fuels a pipeline of promising ventures eager for capital and strategic guidance. The timing couldn't be better. Europe's pay market has matured rapidly, with deal activity reaching record highs, €571 billion in 2022 alone, according to PitchBook. Yet it remains less saturated than the US, where competition has driven valuations skyward. Investors are finding better entry multiples here, often 20 to 30% lower than in North America, alongside a favorable risk-reward profile. Meanwhile, macroeconomic shifts, such as post-Brexit adjustments and the energy transition, are reshaping industries, opening doors for pay-to-back companies poised to lead in renewable energy, technology, and healthcare. Regulatory tailwinds further enhance the appeal. The European Union's push for sustainability and digitalization, backed by initiatives like the Next Generation EU Recovery Fund, is channeling billions into sectors aligned with pay interests. These policies not only stimulate growth but also create a stable, predictable environment for long-term investment. At the same time, Europe's highly skilled workforce, bolstered by top-tier universities and a strong STEM talent pool, provides the human capital needed to drive innovation and returns. Challenges remain, of course. Political uncertainty, regional disparities, and currency fluctuations can complicate deals. Yet these hurdles are outweighed by the continent's resilience and adaptability, traits honed through decades of economic cycles. For pay firms willing to navigate this complexity, Europe offers a compelling case. A market brimming with potential, undervalued assets, and a strategic moment to act. As global capital seeks diversification beyond the US and Asia, Europe stands out, not just as a viable option, but as a necessity for forward-thinking investors.
Thank you for listening to this episode of Hub Capital, the Investors Lounge podcast. I hope you found this content interesting and inspiring. If you enjoyed this episode, don't forget to subscribe to the podcast so you don't miss a single episode, and share it with your friends and colleagues who might be interested. To learn more about T-Hub Capital and our activities, visit our website, hubcapital.com. You can also follow us on our LinkedIn page. See you soon. All the best from the T-Hub Capital team.